All right, guys, starting the week Monday. We're moving towards the end of July, July 22nd, but the date is irrelevant. It's the move, it's the thought process, it's the consistency of trying to look at something so it becomes objective. And therefore, you could diligently react to it. So I'm replaying this morning after the open. Let's just say you came in with the intentions of looking for a location to get long, okay? How could you qualify that? First, you might wait for a bullish transition back through this yellow line, which was the open. So now you're like, I'm waiting to get long. You're waiting to get long. And let me pause it a second. Trying to get 4 points, which is 20 or 16 ticks, or 5 points, which is 20 S&P ticks, or 50 points, or 10 points, whatever the big move is. Everybody wants giant moves, right? We look at a chart, you know, if I buy it down here and I sell it up here 25 points higher, you do all the math and it's a good living. You got to be good at the first 2 points before you're going to be good at the next dozen points. That's what's important. So let's play this out. Remember, this is a P&F, which means it rotates back and forth. That's what it's all about. You're going to hear, oh, I got to share this.
5 quarter.
You're going to hear a male voice when maybe some imbalance buying comes in. We call them edge zones. And red imbalance selling is a female voice. So buying came in and it did what it was supposed to do. Went up.
6 quarter.
Some selling and buying are duking it out in here. Gets through the green. Should go down. And it does. What we're doing is, or what we're looking for a qualifier. Where selling comes, if you're, listen, we're looking to get long at this particular point in the session. And if you were, how do you qualify it? You're looking for selling to come in and it cannot go down. But you'd also like it not to be at the top of a rubber band, which means the context. The market just came from here to here.
5 quarter.
Right there, 5 quarter, 5 quarter. If you didn't hear it, play it back on YouTube if that's how you're watching this. 5 quarter, 5 quarter. You heard it. I just paused it. You heard it and you seen it flash red. Real time. Qualifier, this is the open, that the open's going to be defended and it's going to bounce. The other qualifier is the thing just came. Where did it come from? It came from up here. If you're looking to get long, you have to be careful of getting long after it rallies too much. There's more risk of the retracement and you're stuck at the top. You got to consider that. I always teach it and talk about it like the East Coast of the U.S. Are you buying it in Maine? Are you buying it in South Carolina? Or maybe down in Florida? Where'd it come from? And if you're buying it in Maine, that's fine. But man, you better get the market to react your way sooner rather than later because you could be stuck. And you get that collapse, which is called a pullback, which is called a retracement. And no matter what market you trade, all markets retrace. They go back and forth. That's why it's called a retracement. And so if you play this thing out, we had this nice area qualified, and it wasn't a home run, but it was a 2-point head start. And if you're not getting good at 4-tick head starts, you don't have to be a scalper. It's going to be harder to get good at 4-point head starts in a market like the E-minis. Everybody comes in, a lot of people, I don't want to scalp. They don't want to scalp because they don't want to learn the next 4 ticks, cutting out the noise in order to predict the next 4 and the next 8 and the next 10. It's too hard for them to do. And so people do what? They avoid the hard, but if you find good people to teach you the hard, it's not that hard.